Hi guys, welcome to Gold Price Daily Analysis. Today is Friday 29th of March 2019. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We will start our core analysis right after a quick recap. We've been waiting for an important economic headers to be released. We got them from the United States. Before talking about the GDP, we are going to talk about the initial jobless claims came below forecast, good for the dollar, and continuing jobless claims came above forecast, okay, bad for the dollar, and the pending home sales came below forecast, bad for the dollar. For the GDP came as we said came below the forecast 2.4 and below the last reading 2.6. Though of that, we have seen the gold suffering of a massive sell. Took the gold from 1,312 today to 1,288. What we said in our strategy recap, we said if the GDP printed 2.4 less than 2.4 buy, and if it's above 2.4 sell. What happened? The market neglected the news. I mean, the gold traders neglected the good news and did not capitalize on it. Okay, and rather they used it as an opportunity to close their near to mature opened gold contracts. So you can describe all what happened today in the market as a technical sell-off, has nothing to do with the data. Moving on to the economic calendar for Friday, we are waiting for the following economic headers from the United Kingdom. We will be looking for the GDP quarter to quarter for the fourth quarter and the GDP year to year for the fourth quarter with high importance. From Germany, we are looking for the German retail sales month to month for February and the German unemployment rate for March. Also, it's important. From the European Union, we are looking for the one economic header only, the CPI year to year for March. You can be considered as a market mover. Moving on to the United States, there are so many data to be released tomorrow. We got the most important out of them, the new home sales for February and the Michigan consumer sentiment and expectations, plus the BCE price index. That's all. Let's move on to the technical analysis. On the last trading session, we got a trading range from 1,288 to 1,312. The market is still opened and the numbers are rounded. We do expect the gold spot to close above 1,290. Market is still open. For the moving averages, trading today broke two of the moving averages, the 20 days at 1,303 and the 50 days 1,310 and the 100 days 1,288 and the 200 days 1,242. We are above the 100 days, 200 days daily simple moving averages and below the 50 and 20 daily simple moving averages. For the RSI, 1 hour, it's a 22 only in the favor of the bears, oversold. And for the RSI 4 hours, it's 23 in the favor of the bears, also oversold. And for the RSI 1 day is 40 in the favor of the bears also. So the gold now is on the mercy of the bears. It's not in the hand of the bulls anymore. For the supports at 1,287 and resistance 1,280, then 1,275. The resistance 1,296, 1,300 and 1,304. That's all for the technical indicators. We'll move on to the trading strategy. For the trading strategy, trend is neutral to bearish and the price action is negative. We are below the 20 days, 50 days daily simple moving averages and the US dollar is extremely demanded. Our advice to you is not to take a position, either buy or sell. We need a confirmation on the direction. Unless if you bought today, step in the market again and buy, average your position and look for an exit tomorrow around 1,300. It's risky, but it's 90% going to happen. let's talk about what happened today. The market, including us, from the beginning of the week, we were looking for the GDP to be released. We said that the GDP last reading was 2.6% and the forecast is 2.4%. And we told you guys, okay, anything below 2.4% for some very important or crucial figure like the GDP should create volatility in the market and move the gold up high, maybe up to 1,330, which is very reasonable and logical. What happened today? We got a reading of 2.2%, and what we have seen is something different. We have seen the gold moving from 1,302 to 1,306, then pushing down to 1,288. So we have read so many reports from analysts, okay, on the fundamental side, why the news did not show the reaction, okay, or the expected reaction. The analyst said, okay, that market was looking for 2% or less. Was worried. The market was worried to see 2% or less. So when it came 2.2%, it was like a hell of a good thing. So I'm not buying this thing. I'm not believing in this. My point of view, whether if you like it or no, what I see, what I have seen today on the screen, that there was a technical sell-off because we are approaching the end of the month and the expiry of the contracts. So that's it for today, guys. Please share, like, and subscribe, and I will see you tomorrow.